Hello and welcome to Policy Watch, your snapshot to the week's biggest economic and business development, their impact and relevance. Joining me today in the studio, Subhomoy Bhattacharjee, Deputy Editor of the Indian Express. We saw this week the election dates being announced, something that was being anticipated for some time now. But what it really means for the economy, what does it mean for the spend, what does it mean for policies, and more importantly, what does it mean for the economy growth of the country? To discuss this, let's first hear what's up on here.
Barely 3 days after general election dates were announced, stocks are booming. The Sensex is holding on to lifetime highs. Not just the voter, the Indian economy is also gearing up for polls.
The impact in the process is, of course, at this point, there is no possibility of any freebies to be introduced by parties seeking votes, because obviously the code of conduct has been put into place because elections have already been announced.
In just a little over 2 months, a new government is likely to take over, but already expectations are influencing and informing investment decisions.
A lot of money gets spent by political parties, so that brings a lot of money into the system, in people's hands, in the hands of voters, because elections are a big event.
The markets are riding high on optimism. Experts warn that many of those hopes could be both misplaced as well as premature.
We all know that one of the things that happens in the run-up to an election is that many major decisions are held back both by private investors as well as the government itself. However, in the last few months, one of the efforts that the Finance Minister and the Cabinet Committee on Infrastructure has made has been to clear many projects, large projects, which had been stuck, for a variety of reasons. So the Cabinet Committee on Infrastructure met and has actually cleared a number of projects.
Growth prospects for the Indian economy will depend to a great extent on the resources that the new government will command, and also on the speed with which it can take decisions.
This time, the government has not, the interim budget was not fiscally very profligate. The government has been aware that fiscal deficit has been a problem for the last, say, 2 years. So there has been some responsible budgeting. So overall, from the centre's point of view, I don't think there is fiscal irresponsibility.
Down the years, Indian elections have always been an unparalleled celebration of democracy. And significant or otherwise, it seems they also signal a round of prosperity. With Neetu Eldo's, Vaibhav Verma for Rajya Sabha TV.
So Subhomoy, you've seen the dates being announced. Now that was already in the air for some time. But the first thing first, what does it do for the economy as far as spend is concerned? Your first thoughts on that?
Well, as you can see, Shoma, the first thing that has happened is the markets have liked it. The dates have come through. The elections are on schedule. So there's certainty about when the new government will come. May 17th is the time when one would expect there would be a certainty about the government. So that obviously has helped the stock markets. Now about spend, yes, that is something that will be a tremendous, first of all, the committed expenditure till March 30th, those in any case will go through. So one would expect that the government spending will be there, will go through. But from April onwards, the kicker that can be expected will be a bit dicey this time, because at one level will be the election spend.
Right.
That the government machinery spends considerable amount. Last election it was about 700 crore, the general election. That's going to be there. So that's immediately going to come in the market. So that definitely will be a positive. About other expenditure, yes, those would be flat.
But Shubhama, I mean, this is interesting that you say that there will be a expenditure, like you mentioned, about 700 crore, that's a big amount. But on the other side, these are spends which are temporary in nature, which are not really going into investment or projects. I mean, do you think when you see net, this kind of a spend, what does it do for the economy or the growth?
Yeah, that's a point. It doesn't really push much, but at the same time, this is something that has been built into the Indian, what you might call the spending cycle.
Right.
So there is a certain amount of understanding that yes, the expenditure on the other, on the investment, the capital expenditure will be squeezed. In fact, this year it will be squeezed even more because the budget will only start announcement, get passed in June. It will be announced in June. So not before August, which means the entire expenditure for the year will be squeezed even more into the last 2 quarters.
Right.
So definitely this is going to be a bit of a funny year.
Okay, one thing which comes to my mind is how do we look at this vis-a-vis the global atmosphere? In the sense, elections are timed at this time, but it's kicking in when the global recovery system is also in a stage of its own. So how do you place this vis-a-vis the global?
We actually are catching it at a bit of a wrong point, in the sense that this was a time when there was a sort of a comfort zone. You know, the markets could have taken on. There is a bit of a good position that the RBI, for instance, has created for the
Right.
rupee. The rupee is hardly budging now. Now, that's substantially different from what it was, say, even
Surely,
a quarter
a few
ago.
months back, yeah.
The current account deficit is in a very good position. So,
right.
actually, it was a very good platform on which to build a very good set of cyclical positives.
Right.
But that is a positive that we'll have to forego for the time being. I mean, for the first 2 quarters, basically not much of good thing will come out of that.
You know, and you kind of prompt me to the next question, because a lot of what would happen, and like you rightly said, would depend on the outcome of the polls, in the sense there is a big bet out there whether we'll really have a single majority party or we'll have a stable coalition also, or will it be left to a fractured mandate? What do you think of that? How is that going to play out as far as the economy is concerned?
Yeah, you know, that right now it doesn't really matter which party, as long as the mandate is for a stable government.
Right.
Things, I mean, you can actually hear music. But if it doesn't,
Yeah.
then we are going to be in deep funk, in the sense that everybody's investment plan is now getting structured with how the government moves. And if they see uncertainty on May 17th and going forward, that it's really going to be a fractured mandate, then no matter what it might mean for the political economy, for the economy as such, we are going to be hugely tanked.
Yeah.
And I can't see anything other than a series of bad news after that till September, when we'll be up for rating again.
Right.
And that time, if those guys decide that India has slipped down from investment grade, we really are in for big trouble.
This is the time, like you said very rightly, that we were just about getting, more comfortable, let's say, vis-a-vis the economic parameters, and we could have really plowed on that. But at this point, elections coming in means it also puts a lot of burden for the next government to really not lose much time and pick up those threads, isn't it?
Sure, Soma. I mean, you've been tracking the energy sector. I mean, you know very well the lead time it takes for an investment plan to be made and for that to be executed, and I mean, how the cash flow occurs. So obviously, if a government sort of says, like for instance, NELP is something that is something on which the government has to say something. The gas pricing. Now, these are issues on which they have to be really moving fast. Energy is the most, I suppose, right now, even more than any other time, the most significant determinant of how the Indian economy will play out in the next couple of years. So yes, decisions.
You know, but when we saw the markets over the last 2 days, now that came as a big surprise for many. You know, record being broken. What do you think? And it kind of coincided with the dates being announced. So, like you mentioned, I'm sure certainty was one thing which led. But what are the sentiments you think which led to the huge, kind of spike in markets, if I may say so?
No, there was a spike, and it's a domestic spike, because over the last 2-3 days, the markets had been cautious because they were playing cautious. The Asian markets were cautious, the European markets were cautious, and they were cautious because of the US and the China data that was coming up, the US jobs data, the China data,
Right.
those were coming along. So all the other markets were cautious. So there wasn't movement.
Right.
And here was an outlier, the Indian market, which actually flared up.
Right.
And the flare essentially came from this set of announcements.
Right. So on that note, that we got a real surprise from the market when it went up for the last 2 days, and we are hoping for a better, stable government to come in. We will slip into a break. We'll be right back. Welcome back. You're watching Policy Show, and now we are going to talk on the current account deficit. This was a figure, or rather an item, if I may say so, which really had the Reserve Bank thinking a lot about what to do till a few months back. We saw some measures like huge import curbs put on gold, which was beginning to worry the government and which would have actually played havoc with the fiscal numbers. Luckily for us, I think some things are really fitting in place, I would say. CAD numbers came out this week and we saw a blip, a big drop in it, which gives a lot of comfort to the economic parameters. Let's just hear it out as to what the story was all about.
Despite a sharp reduction in the current account deficit in the third quarter, the government is in no hurry to relax restrictions on gold imports. On Thursday, the finance minister said the centre will revisit gold import duty only after CAT figures become clear for the end of the year. The RBI data released on Wednesday showed CAD narrowing to just $42 billion or 0.9% of the gross domestic product. This was much better than what Chidambaram predicted in the recent interim budget. In the budget speech, the finance minister said CAD would be contained at $45 billion or below 2.5% of the GDP. Last fiscal, CAD stood at a high of $88 billion or 4.7% of the GDP. Chidambaram pointed out that the UPA brought down inflation by containing fiscal deficit and demand. He promised that if the same path was continued for a year or two more, retail inflation could be curtailed to below 5%.
This will take some time in India to build supply chains. These chains are being built. But let me assure you and conclude this part of my speech, by containing demand, by controlling the fiscal deficit, by containing demand, by spending less, we have brought down inflation. And if we continue on the same path for 1 or 2 years more, you will find that wholesale inflation comes down to about 3% and retail inflation will come down to below 5%, which is our goal.
Chidambaram said his government's policy to borrow and spend more had controlled inflation.
Our government consciously decided, because of the worldwide slowdown, our government consciously decided that we will borrow more and spend more so that growth is not affected.
The RBI is worried that by deferring a large amount of subsidies to the next fiscal year, the government may harm growth prospects. Last year, the government managed to avoid the threat of credit rating downgrades by cutting spending, and gold imports helped. But inflation remained a huge problem. Bureau Report, Rajya Sabha TV.
So consumers have really given Mr. Chidambaram a great piece of news by actually bringing down their gold imports or gold buys, maybe also because they don't have it. But when you see at the larger picture, Subhomoy, as far as CAD is concerned, this must be the biggest positive that has kicked in the past few months. What's your first thought on that?
Yeah, it's interesting, Soma, that you used the word item. Actually, we have danced to this item number for the last 2 years. And yes, it is significant, the gold imports having come down, but it's got its cost. And the biggest cost is that there's a huge spurt in smuggling. So what it does for lots of other associated sectors is something that we'll get to know as we go forward. India's love affair with gold is not a very short-term affair. So the structural problems that these do kick in for the government, I mean, this is something which the new government will have to handle.
That's interesting, because you're talking about actually gold imports not really going down, but what we are seeing is not coming through the legal channels, but moving to, like you said, smuggling or other channels which are not recognized. Now, that should be a cause of worry for any government, isn't it?
Any government, and that, you know, that basically means that we had considerable improvement in our control of the parallel economy, because it was real estate, gold. These were the two primary drivers. Now, that's we had been able to take away gold from the table. Now it's come back, and it's going to be a tough job being able to figure out whether the smuggling is really significant or not. It's something which every government will be rather uncomfortable with, and it introduces a new matrix into the equation, which we hadn't been necessary for us to handle for considerable number of years. Post-liberalization, we hadn't had to handle this thing.
Right, but this must have been it's a tough choice, isn't it? I mean, you had inflation, and you had current account deficit as one of your biggest concern areas. RBI kept flagging that as the reason why you could not do much about loan rates and banking rates. And CAD was the big figure. You couldn't do much about oil imports. The only big thing was gold imports. So they did that with duties, but you're talking of a far graver danger, that
Absolutely.
there are structural issues.
Absolutely, and I suppose there is limitation. I mean, there's no doubt that the government has a problem. So one of the things that they have introduced is the inflation index bond. Now, if the subscription to those rise and rise significantly, then we would know that yes, people are making a conscious choice instead
not buying gold.
Not buying gold, and instead going into the financial sector. The savings are rising, and the government is giving them a good sort of icing on the entire thing, and are able to take the inflation index bond as a substitute.
So can I ask you finally, if the government, the new government, whoever it is, has to take a look at this, that is balance CAD, but also look at the structural issues, what are the immediate things you would suggest for them very quickly?
Gold import at the current rate, definitely, the import due to the current rate of 10% is frankly unsustainable. So that is something, since our current account deficit has come down, probably some thought needs to be taken on reducing the duty.
Okay.
That is necessary.
Okay.
We can't keep it at that rate.
So right, on that note, Subhomoy is suggesting gold duties to be actually brought down, and that would mean good news for at least consumers who buy gold jewelry, although I don't think those are the people who are leading to the huge CAD. On that note, we'll slip into the break. We'll come back with more news. Welcome back, and now we are talking about the banking sector. Earlier this week, Finance Minister P. Chidambaram held a quarterly performing review meeting with the chief executive officers of state-owned bank and financial institutions. Chidambaram said the biggest challenge faced by PSU banks was non-performing assets and their asset qualities. Let's hear what the story has to say.
Bad loans and recoveries are the two focus areas that the Finance Minister is outlining for the PSU banks. At a meeting with chiefs of the various banks on March 5th, the Finance Minister pointed out that credit disbursal had declined to the medium-sized industry, while it was only satisfactory for the agriculture sector.
If you break it down by sectors, sectoral growth of credit is higher in micro and small industry, services, retail trade, commercial real estate, personal loans, and housing. So these are the sectors that are absorbing credit at a rate higher than last year. Medium industry credit growth is negative. Agriculture, wholesale trade and NBFC is satisfactory.
Chidambaram said the government will give capital support to banks, but they must focus on profitability. Bad loans of PSU banks rose over 28.5% from March 2013 to September 2013.
All banks satisfy the Basel norms, but as you know, the RBI standard is 1% above the Basel norms. So we are not satisfied with meeting the Basel norms. We want to meet the RBI norm, which is 1% higher than the Basel norm. So we examined or discussed ways in which to raise additional Tier 1 capital. Some ideas were thrown up, we discussed them, and hopefully we can take them forward.
Talking about the fate of new bank licenses, Chidambaram said the process would not be affected by the Model Code of Conduct that is now in effect. Bureau Report, Rajya Sabha TV.
So that was that. The finance minister, I think, looked pretty grimaced and stressed when he was actually making those statements on what the performance is. And it's kind of strange, isn't it, Subhomoy, that the same finance minister had something of comfort when he talked of CAD, but he had something really to worry about when we talked about the banking sector. Your first thoughts on what is this whole puzzle of the CAD?
The problem with the NPAs of the banking sector is that they have become aggravated because the economy has slowed down. So that's acceptable. if the economy doesn't do particularly well, the banks as the index of the economy would also be doing badly. No surprises there. What has created the additional pressure for the public sector banks is that these banks have taken on infrastructure credit way beyond what they could normally handle. And that part of that has happened because of the initial few years of the UPA government when they asked for a stimulus. The banks were asked to lend more. And the credit rate, for instance, in 2010-11 was 23% of, which was a far higher rate. I mean, so that above the normal rate in which credit has been growing over the years. So that is coming back to haunt these banks.
So when we talk about NPAs and we talk about the banks being stressed out on that front, from your point of view, as I understand, it is primarily led by infrastructure projects that have got stuck?
Yes, primarily those, because the infrastructure projects have got stuck because either it's a policy issue, environment related, or else land issues, which are political economy, or else simply promoters having upped the ante and left. Those who have been there have also been in a problem because the projects have not moved. So essentially, the report card for the bank is that there's red ink all over the balance sheet.
Right, and also I think a concern area which the finance minister pointed out was the fact that the lending to the medium industries is actually in the negative zone. Now, as we know that large projects have got stuck, and it is around these times that you look for the small and medium industries to really pump in and to kind of meet up some bit of the demand or investment cycle. So how do you see that? How do you see that that has moved into the negative?
Yeah, and I suppose that's the most sorry part, because we had so many ideas for helping out the small and medium enterprises, and here the medium loan to the medium sector, medium enterprises has actually come down, which is essentially not surprising, because the growth levers, the manufacturing sector has shut itself off. So these are the medium industries, which are the ancillary in the suppliers, ancillary guys supplying to the big guys. So if those guys are not particularly performing well, or are they cutting back on production, and we have seen that, for instance, in the automobile sector.
I was just going to come to that, yeah.
Yeah. So you would expect the medium enterprises to be actually, really, sort of backpedaling.
So like auto, I think one of the other areas, can we think of mining, because that's been a huge sector which we had expected to kind of take off, to bring in a lot of investments, which are all stuck midway, and we really don't have clarity as to how we are going to go. The ancillaries with that, do you think?
Yes, absolutely. If you could look at the iron ore, steel, the downstream from the steel industries, basically that's one huge area for the medium enterprises. Now, those enterprises aren't particularly getting work. There was a lot of intermediate level iron ore process, sort of making them into pellets and others. Those industries are right now in a difficult position. So overall, medium enterprises, the growth drivers have vanished from the manufacturing sector. At the top level, the medium level companies are simply not there.
And what's your take on, say, agriculture? I mean, that they're saying is satisfactory, but we've seen a more or less steady growth in agriculture for the last few years, thanks, of course, to the weather gods as well. But that kind of lending, I mean, despite the government saying we're doing so much, we really don't see much of a push there.
Yeah, in fact, that's surprising, because agriculture this year has grown by 4%.
That's right.
So you would have expected that last year, the agricultural credit would have actually taken off. So that does show that there is a weakness there, that either the priority sector loan, which is going, probably is going to more to the institutional players, players like NABARD, players like others, who essentially are taking sort of working capital loans. And it's not really going out to the farms. So the farm sector, that means that there's a lot of agricultural credit which isn't growing. Or one figure that could be very interesting is Kisan credit card. What is the level of utilization and what is the level of increase of that? I think this year's Kisan credit card figures aren't looking particularly great in terms of expansion. So that does show that the agricultural sector, despite the growth, hasn't really been a very big pusher of credit.
So that's kind of a mismatch, isn't it? I mean, banks' exposure, as you said just now, was pushed by the government to go towards infrastructure, which really has not grown. And the bank's exposure to agriculture, which has actually grown, has not been that much. Isn't it some sort of a mismatch even in the whole policy directive?
Absolutely. And that's why you see that the banks, almost all the banks, are sort of withdrawn from the credit market. There's very little real credit growing. So last year, most of the banks booked profit, and in fact, year before that also, on treasury income and on fee income. Those are safe areas in which you can make your money without getting into the hassle of credit. But on credit exposure, most banks have sort of withdrawn from getting into fresh areas, and that's showing.
But the finance minister also talked about a capital subsidy for these banks. Now that, the word subsidy itself sends signals going everywhere. What do you think of that? I mean, isn't this becoming a pattern now for?
Absolutely. But Soma, I mean, you know very well, you've interviewed the finance minister several times, that what exactly is the government's headroom in terms of subsidy. Just before this, we were talking about fiscal deficit. So if we are going to keep the fiscal deficit at 4.6% and to be reduced to 4.1%, then how much of headroom does the government have in terms of offering any subsidy to banks? I mean, the government could say that I'll give subsidy, but it will just not be there. So the choices again would be in terms of the banks taking money from the market.
So for a minute, if I'll make you one of the chairmen of one of the PSU banks today, what is it that you would look at to going forward? You
how to escape.
NPAs on your books. So what would you want the system to do?
The first thing is, I don't think that tier 1 capital, the capital problem is the way of looking at it. The finance minister also talked about shoring up the capital of the banks, but that is a reflection of the problem that is happening on the credit book. How is the credit of the system being given? And banks, many of these big banks, while they are good at giving credit, the smaller banks simply are not. And we have to decide whether they should be there in the business of project finance at all. Okay. Frankly, I'm not very convinced that they can handle that sort of a game.
Right.
Giving out, they don't have that capacity, they don't have the technological ability,
right.
They don't have the manpower to be able to deal it. So that's something that has to be taken a very clear stand on.
Right. So on that note, I think we have a lot for the next government coming in. There's a lot, as you mentioned, on the banking front, structural issues as far as imports of gold is concerned, which I think is going to be a big worrisome area for any new government. And of course, elections. We are just going to hope that there's going to be a stable government who will come with stable policies. Thank you very much, Subhomoy, for joining us with all your insightful thoughts. With that, we come to a close to this edition. Good night.